Much appreciated for your time. So we're sitting on the flat line, pretty much no movement coming through for the Nigerian market. But overall, Nigeria, one of the worst performing bourses last week. And again, we're just seeing quite a bit of profit taking because we are seeing lighter volumes coming through for Africa. And this is due to the fact that we're seeing some worries coming through in the Eurozone, and that just affecting overall emerging markets, including Africa.
Yeah, that's true because Nigeria we had a very good run, we were stubbornly stuck below 20,000 basis points for a while. Then good news from Europe, foreign investors seem to have more confidence in emerging markets. And then we had a very interesting rally. We rose above 22,000 points. Then the banks started dropping in their corporate actions and first quarter results, and we just poured confidence the more. Index rose above 22,000 points. Then some more good news came in from the likes of Tiger Brands and Dangote Flour. And the confidence as well improved. But some bit of profit taking, especially with all the upheavals in Europe, especially with the resurgence in the Greek crisis again. And then we can see the index shaking, profit taking is going on. Alternative asset classes are still doing well. So the equity market right now is actually suffering some short confidence bouts, but we hope it will recover.
When you see the volumes coming through, Jimmy, from the foreign front, from the local front, give us an indication of the mixture thereof and whether you're optimistic that we're still going to see this trend that is anticipated of foreigners being very interested in Nigeria.
Yes, talking of foreigners interested in Nigeria, there are two ends of the markets. One, you have speculative trades where people just come in hot money. People are investing in the stock market, in the bond market. Now, as long as there are arbitrage opportunities, that would continue. These foreigners will keep coming in, and once there's any bad news, then they flee. Or if there's any form of, if they've made enough profit, then you're going to see profit taking, and they're going to book their income and flee and leave as well. Then you have another set of foreign investors, which is the likes of Tiger Brands, who are coming in and not just coming in to buy stocks, but coming in to actually make proper big ticket acquisitions, which is what has been affecting the likes of Dangote Flour, and has also had some spillover effect on Dangote Sugar, which is another member of the Dangote Cement Company. Not too much announcement from the Tiger Brands Group, but we understand that they're actually interested in making an acquisition in Dangote Flour, just as they made in UAC Foods. So that has kind of raised investors' hope and investors' confidence. And like I said, the spillover effect of that rally in Dangote Flour has gone into Dangote Sugar.
When you see Dangote Sugar, Dangote Flour, Dangote Cement, would you say that these are the industrial stocks that one should be looking at if you do want to take advantage of the growth potential in Nigeria?
Yes, actually. When you look at the Dangote Group, for instance, this is a Nigerian born brand that is actually going continental. So beyond Nigeria, for instance, Dangote Cement is poised to become the biggest cement player in Africa by the turn of this decade. So fundamental investors who want to who want to go long, actually want to pick up such a stock because, like I said, they actually have big continental ambitions, and they're actually matching these ambitions with actions, making acquisitions, greenfield and brownfield acquisitions all over Africa, especially for the cement. And like the president of Dangote Industries has said, Alhaji Dangote, they intend to list on London Stock Exchange next year. So actually investors are confident, they will have greater confidence in the company's corporate governance standards. The liquidity of the stock would also improve, and disclosure standards will also improve. So long-term investors are actually looking at this group with a better understanding of the details, and people are trying to go long in it right now.
Looking at the local currency, Jimmy, when you see the Naira that is pretty stable against the US dollar, the dollar has been slightly stronger. We know that the Naira has weakened somewhat, but still relatively stable. If we see a significant blowout coming through in the Eurozone, and everyone is watching this quite closely, will the central bank be strong enough to intervene, as it has always been, to ensure that the Naira stays within its target?
Yes, for now, the Naira has been relatively stable as a result of two factors. One is erosion in the value of the dollar and the euro, which are the major foreign currencies. But there's a red flag somewhere along the line in terms of the Naira's performance, and it will be interesting in the next couple of days and weeks to see how that performs. Nigeria's oil revenues dipped last month by about 13.8%, which means ordinarily that should have meant that the amount of money that the subnationals and the federal government, the T tiers of government would share, should have actually shrunk. So the federal government had to dip its hand into the excess crude account. Just a little bit of history on the excess crude account. The excess crude account used to be the precursor to the sovereign wealth fund. It was the amount saved in it was the excess and above the benchmark rates for dollars. So, but right now, the federal government has started to dip its hand. Fine, not too much money has been collected off it, just $135 million out of the total bounty of $4.2 billion. So how that performs, oil performance in the next few days, Nigeria's oil revenues in a couple of months will actually give us a longer-term view of where the Naira is heading. But right now, as long as the bad news keep coming that oil production is dropping because of crude oil theft, then one could be a little cautious on the direction of the Naira for now.